in 2018 has ended, and we are with the reading of the communique by the Central Bank Chief Godwin Emefiele, expected at 2 o'clock. We are live on that as soon as it happens. Ahead of that presentation and all the way to 3 o'clock local time, let me introduce our panel of analysts who will be bringing their insights and perspectives into the big interest rate story today. Here in Lagos, in our headquarters, Robert Tomato, the head of research at AfroInvest. Thank you very much for coming, Robert. Olalekan Labode, also head of research at Vetiva Capital Management. Thank you very much.
Thank you.
And Peter Moses, a research analyst at Codros Capital. Peter, it's good to have you here. And let's take this all the way to Abuja, where we have sitting there in our Abuja studios, a chartered stockbroker and a professor of capital markets at the Nasarawa State University, Uche Uwaleke. Thank you very much for coming, gentlemen. Professor Waleke, we'll start with you, but very quickly, we need to bring this to the attention of everyone. The stock market here is down today. We had a roaring 0.30% yesterday, but the Nigerian stock market is down now. All the major indices are in the red. Of course, if you're watching the political situation in Abuja as we speak, the market seems to be reacting to that this day, but we don't have any assurance of that yet. But right now, as we speak, the banking sector is down by 0.21%, and the Nigerian Stock Exchange Offshore Index is also down by almost the same margin. This is a day we're watching the political developments in Abuja on the day that is very important for the Nigerian Central Bank Monetary Policy Committee to make a decision. Professor Waleke, let's start with you. As I said, this is the countdown to the MPC decisions. Give us a minute of your views about the background to today's meeting. 1 minute.
Yeah, thank you very much. I don't expect the members of the committee to tinker with the policy parameters, so I expect them to, hold the rates. Part of why I expect them to do that is what you have just, the reason you have just mentioned. The equities market is down, and that's partly because of the exit of, foreign investors who are going in search of higher returns in the U.S. On the back of the interest rate normalization that is happening there now, which the U.S. Federal Reserve is in front-loading, trying to hike rates, faster than expected. At the last Federal Market Committee meeting, the members increased the rate, to 1.75 to 2%, and the expectation is that when they meet in September, and again in December, that it could be pushed to as high as 2.25%. So that is partly what is responsible. Why you have this, bearish run now in the market, such that the year-to-date return has been dragged to as high as 4.4% in the negative territory. You have other concerns that are posing a threat to the disinflation we've had for the 17 consecutive months now. Yes, inflation has dropped to 11.23%, we are told, from 11.6% in May. But there are threats, and these threats are evident for everyone to see. The pre-election spending is there. The fact that we're also going to have some fiscal injections arising from the delayed 2018 budget. Okay, so these are threats to the disinflation we've had for quite some time. And if you look at the global trend quite closely, it's not only in the US, as a matter of fact. You also have even in the UK. The US president was in Britain the other day, and he expressed displeasure over the soft Brexit stance of Theresa May. So that tells you that these tensions are still there. The Brexit negotiations are, still surrounded by a lot of uncertainties. Against this backdrop, I wouldn't be expecting the members of the Monetary Policy Committee, to lower the policy parameters, particularly the anchor
Professor.
rate, that's the MPR.
Professor, let's hold it very quickly. Thank you very much for raising the curtain here for us. And of course, we're going to be tracking the market's position. Of course, is closing bell here on the Nigerian market is 2:30. We're 1 hour or less into that right now as we speak, and the market is bleeding. In fact, the industrial goods segment of the market is down now more than 3%. The banking sector about 0.2%. The broad share index 0.51%. Oil and gas in the red by 0.45%. Consumer goods is down by 0.5%. A very bloody Tuesday. The stock market as we speak. Let's get our panelists, other members of the panels here in Lagos to speak to some of what we have as we speak. Let's start with Robert Omotunde from AfroInvest. Some of you folks wrote out a few comments ahead of this MPC meeting. There's a consensus that this would be a do-nothing. Give us 1 minute.
Okay, so, I mean, like the professor said, we at AfroInvest had rolled out our expectation for this meeting. We think it's also going to be a meeting to maintain status quo, where the Monetary Policy Committee will, again, reiterate their stance, in light of the various global macroeconomic developments, geopolitical tension. Of course, of particular interest is interest rate normalization in systemic central banks, US to be particular. And if we can just borrow a line from where the committee dropped it the last time, they had noted that there is a balance, so to speak, between the downside risk to growth, given that we've seen traction in growth figure, GDP reading, at least for Q1, reading 1.85%, and then inflation, the upside risk to inflation, which again seems to be moderating.
Okay.
Between then and now, it seems that nothing has really changed.
Nothing has really changed. We have 2 minutes to go on break. I'm going to allow other 2 members to have about less than 1 minute each. Peter Moses, what's the take from Quarters Capital?
Pretty much in line with consensus opinion and views. But then, of course, virtually everything has been said concerning the position of data, both foreign and domestic. So I'd just like to take some cues from other sub-Saharan African countries that actually held monetary policy meetings last month. That was in June. Angola, Kenya, South Africa, Uganda. Out of all those countries, only Angola actually took a decision to cut rates. And I think the only condition that necessitated that was because inflationary conditions expectation in Angola actually expected to actually trend downwards further, and also the fact that growth has been significantly pressured in that economy. Also, that actually the lingering currency peg earlier in the year had actually been removed, so gives that leeway for the monetary policy authority. So in the case of Nigeria, we are not seeing any of those stuffs. I mean, as rightly said by the professor and Robert here, growth looks very good, and other economic data actually progressing in line.
Thank you very much. Let's give Lekon a bit of a few seconds to will take us through more of what you folks at Vetiva says is Fed herdsmen elections to stay MPC's hand.
I think for us, we actually do agree with what consensus is. Consensus that rates are going to be held, and for obvious reasons. One of the things I like about the last MPC meeting was that apart from the rate decision that was made, we saw some form of forward guidance, and that's what I'm going to actually be looking for in this meeting. And from that forward guidance, the CBN governor was able to tell us that
forward guidance
is actually key.
Forward guidance. That's interesting. We're interested when this MPC do nothing, we'll know what the forward guidance is. That's why we're coming back to you after the break. You're watching Business Incorporated, a very special edition this Decision Day.